Banks are changing ATM cash access rules right now in ways that did not exist just a few years ago. And if you are over 60, there is a very real chance these changes could affect how you access your own money. I want to be very clear from the start. This is not about some rumor on social media. This is not a guess. And this is not fear for the sake of fear. What is happening is quieter than that, and in some ways more dangerous, because most people do not notice it until the machine says no, the account gets flagged, or the cash they expected to withdraw is suddenly delayed. If you depend on ATM access for groceries, rent, medication, gas, or simply peace of mind, then what I am about to explain could matter a lot more than you think. Here's what changed. A few years ago, many routine cash withdrawals were treated exactly that way. Routine. If you used the same bank card for years, took out money when you needed it, and stayed within your bank's normal limits, the process felt simple. But now, banks and credit unions are relying more heavily on fraud detection systems, predictive analytics, suspicious activity monitoring, and protective controls designed to stop scams and abuse before money disappears. That may sound helpful, and sometimes it is. But here's the part most people don't understand. Those same systems can also slow down or restrict perfectly legitimate access when your behavior suddenly looks different from your usual pattern. The CFPB has specifically encouraged institutions to use fraud detection tools, alerts, cash withdrawal limits, geographic transaction limits, and trusted contacts to help spot elder financial exploitation. Source: and seniors are the group most likely to feel this shift first. Why? Because older Americans still rely more heavily on in-person banking, paper statements, and traditional account access than younger customers do. As of the CFPB's March 2026 National Age-Friendly Banking Survey, 58.4% of adults aged 60 and older had visited a branch in person in the past month, and only 53.6% had used their primary bank's mobile app in that same period. Nearly half still used printed paper statements. That means when banking moves faster into digital monitoring and fewer physical branches remain nearby, seniors can be the first to feel squeezed between two worlds: a system that expects digital behavior and real life that still runs on cash, branches, receipts, and habit. Source: now add one more change, and this is where it gets serious. Physical branches have been disappearing for years, and that trend has not stopped. AARP reported that thousands of branches closed nationwide, and Newsweek reported that more than 300 branch closures were proposed in just the first 3 months of 2025. The Federal Reserve Bank of Philadelphia data, cited by Newsweek, said the number of Americans living in banking deserts increased to 12.3 million between 2019 and 2023. So when a branch closes, you do not just lose a building, you lose the place where a teller can look at you, hear your explanation, override confusion, and solve a problem face-to-face. If the ATM declines your withdrawal or your account is flagged and the nearest branch is farther away, that inconvenience becomes a real access problem very fast. Source: so how does the system work now? Think of it like this. Every time you use your ATM card, the bank's systems are building a picture of your normal behavior. Not just whether the card is valid, but how you usually behave. How much cash you take out, what days you usually withdraw, which machines you normally use, whether you pull money once a week, twice a month, or only when Social Security or pension money hits, whether the transaction happens near home or suddenly somewhere new. The system is not guessing, it's matching patterns. And when a transaction does not match the pattern it has built for you, that can trigger a review. Not because the bank knows something is wrong, but because the software believes something might be wrong. That difference matters. FinCEN, the Treasury Bureau that deals with financial crimes, and the American Bankers Association both warn financial institutions to watch for sudden changes in how older customers use their accounts. Their red flags include frequent large withdrawals, daily maximum ATM withdrawals, unexplained transfers, debit transactions inconsistent with the customer's history, sudden non-sufficient fund activity, and new people suddenly conducting transactions on the older person's behalf. That is why I keep saying this is not random. The system is scanning for changes. A few years ago, this level of monitoring was not part of everyday life for most people in a visible way. Now it is built directly into fraud prevention. Source: let me show you the first major trigger, because this one catches people by surprise all the time. large or unusual ATM withdrawals. Imagine a retired woman who usually takes out $80 or $100 at a time for errands, tips, groceries, and church donations. Then one weekend, she decides to withdraw $600 or $800 because she wants cash on hand for home repairs, travel, or helping a family member. To her, it is her money and her choice. But to the system, that jump may not look normal at all. Here's what changed. Banks are not only looking at the amount, they are looking at whether that amount fits your past behavior. If it does not, the transaction can be declined, the daily limit can feel suddenly smaller than expected, or the account may be pushed into verification. That is not a guess. FinCEN specifically lists uncharacteristic, sudden, abnormally frequent, or significant cash withdrawals, including daily maximum ATM withdrawals, as a red flag. Source. Now this next part is critical. Even if your bank is trying to protect you, the timing can work against you. If that larger cash withdrawal happens on a Friday evening, on a holiday weekend, or while you are away from your usual branch, you may not be able to explain it immediately. By the time you realize something is wrong, access is already restricted. The ATM simply says the transaction cannot be completed. Or your card works for a small amount, but not the amount you expected. Or a fraud department message tells you to call in before more cash will be released. That is how people start feeling like they are being shut out of their own money, even when no one stole a dime. The second major trigger is using ATMs in different locations. And yes, this affects seniors more than people realize. Maybe you usually bank in one town, then visit your daughter in another state. Maybe you spend part of the year with family. Maybe you are traveling for a medical appointment. Maybe your local branch closed, so now you are forced to use a different machine across town. To you, those are ordinary life changes. But here's the part most people don't understand. Geographic changes are exactly the kind of pattern shift some banks are told to monitor. The CFPB has discussed age-friendly account features such as geographic transaction limits, and that tells you something important. Location now matters more than it used to. If your card suddenly appears in a place where you do not normally withdraw cash, especially combined with a different amount or a different frequency, the system may see risk before it sees your explanation. Source. The third major trigger is a sudden increase in cash usage. This one can be especially frustrating because the person involved often believes they are just being practical. Let's say a man who mostly uses checks or his debit card starts withdrawing cash several times in one week. Maybe he is worried about inflation. Maybe he wants emergency cash at home. Maybe he has heard rumors about bank disruptions and wants to feel prepared. Or maybe a scammer has convinced him to pull out money little by little so it does not look suspicious. The bank does not know which of those reasons is true at first. It only sees the pattern change. FinCEN warns about dormant accounts suddenly showing constant withdrawals and about debit transactions or transfers that are inconsistent with the older customer's past behavior. The ABA also warns families and banks to watch for large, frequent, or unexplained withdrawals. That means a fast change in cash habits can be enough to put you under scrutiny. Source. And here comes the fourth trigger, maybe the most sensitive of all, third-party withdrawals or shared access. This happens when a relative, caregiver, neighbor, or friend starts helping with banking. Sometimes the intention is innocent. A son drives his mother to the ATM. A caregiver knows the PIN. A grandchild runs errands. But the moment another person starts handling the card, the account stops reflecting one person's predictable routine and starts reflecting somebody else's habits too. That can create behavior the bank views as unusual. New devices, new locations, new timing, new amounts, new urgency. FinCEN warns that a new caretaker, relative, or friend suddenly conducting transactions without proper documentation is a major red flag. The ABA says to watch for ATM withdrawals by an older person who has never used a debit or ATM card before, new powers of attorney the person does not understand, or bank statements that no longer go to the customer's home. That is not small print. That is exactly the kind of thing institutions are told to notice. Source. So what happens when you get flagged? First, the obvious problem. The ATM may decline the withdrawal. Second, the less obvious problem. Your account may be pushed into extra review or verification before more money is released. Third, the emotional problem. Most people assume they can fix it instantly, but that is often not true if the transaction happens after hours, during travel, or away from a branch. You may be told to confirm your identity, answer security questions, wait for the fraud team, or explain recent activity. And if the issue involves a lost card, stolen PIN, or unauthorized electronic transfer, federal rules also make timing important. The CFPB says if you discover your debit card or PIN was lost or stolen, notifying your bank within 2 business days can reduce your liability, while waiting can increase it. So delay is dangerous in both directions. Dangerous when you need cash, and dangerous when someone else may be accessing it. Source: by the time you realize it, access is already restricted. That is the sentence I want you to remember. Because this is not how people imagine money problems anymore. They think of theft, they think of hackers, they think of identity fraud. But they do not think about walking up to an ATM, inserting a valid card tied to a funded account, and still walking away empty-handed because a pattern changed. Yet that is exactly the kind of friction modern fraud controls can create. And as April 2026 begins, these systems are not being rolled back. The banking world is still moving toward more digital protection, more pattern analysis, and fewer face-to-face rescue points. So how do you protect yourself? Step 1. Keep your withdrawal habits steady whenever possible. If you usually take out one amount, do not suddenly jump to a much higher amount unless you truly need to. That does not mean you are doing anything wrong. It means you are avoiding a pattern shock that software may misread. Step 2. If you know you will need an unusual amount of cash or you will be using your card in a new city, contact your bank before it happens. Tell them the date, the reason if you are comfortable, and the general location. A 5-minute phone call before the withdrawal can save you an hour of panic afterward. The entire logic of today's systems is matching expected behavior, so give the bank a reason to expect the change. Step 3. Turn on alerts for your account. This is one of the smartest things you can do right now. The CFPB has recommended alerts for specific account activity as an age-friendly protection, and older adults are also encouraged to work with their bank or trusted contact to guard against fraud. You want alerts for withdrawals, debit card use, balance changes, and login activity if your institution offers them. Why? Because speed matters. If a transaction happens that you do not recognize, you want to know immediately, not when the paper statement shows up weeks later. And if you are not comfortable with phone apps, ask your bank about text alerts, automated calls, email alerts, or printed options. Protection only helps if it reaches you in a way you actually use. Source: Step 4. Never share your ATM card or PIN casually, even with people you love. If someone truly needs to help with your finances, do it the right way through your bank. Ask about a trusted contact, view-only access, account permissions, or formal legal arrangements that are documented properly. The CFPB says trusted contacts can help protect account holders, and nearly 30% of adults aged 60 and over already have one on file with their primary institution. That matters because informal help often becomes the exact kind of unexplained account activity that causes trouble. Step 5. If your card is declined, your cash access is restricted, or you notice withdrawals you do not recognize, contact the bank immediately using a number you know is real, like the one on the back of your card or on a statement you already trust. Do not wait. Do not assume it will sort itself out tomorrow. Source: Now let's talk about the scam layer because this is where fear becomes a weapon. Scammers know banks are watching for suspicious activity, and they use that fact against older adults. They send texts about a fraud alert. They call pretending to be the bank's security department. They claim a large purchase was made, your account is under attack, or your money must be moved immediately. Then they pressure you to reveal personal information, card details, passwords, or a verification code. The FDIC warns that bank impersonation scams create urgency on purpose and often ask for social security numbers, debit card details, or account passwords. Real banks do not ask you to panic. Real banks do not need you to rush money out the door to protect it. And real banks should not be asking you for your PIN over the phone. If a message scares you, slow down and contact your bank directly using a number you already know. Source: But here's where it gets even more dangerous. Some scammers pretend to be from the government. The FTC has warned about callers who say your money is at risk and must be transferred to a safe account, withdrawn in cash, turned into gold, or sent through a cryptocurrency ATM. That is a scam, period. And if the caller tells you to stay on the phone while you go to the bank, to lie to the teller, or to withdraw money urgently, that is also a scam. The IRS says the same thing in its own way. The IRS will never call to demand immediate payment using a specific method like a prepaid debit card, gift card, or wire transfer. So if someone claims to be from your bank, the IRS, or any agency and pushes you to move money right now, hang up first and verify later. Never the other way around. Source. And that brings us back to the bigger warning. The threat is not only that criminals want your cash. The threat is also that the rules around access, monitoring, fraud prevention, and branch availability are changing fast enough that many seniors will not see the new reality until they are standing in front of a machine that suddenly will not cooperate. That is why this matters right now. Not next year, not someday, now. Because when the system flags you, it does not begin with a long explanation. It begins with a denial, a delay, a question, or a frozen moment that arrives exactly when you need your money most. So if you are over 60 or you care about someone who is, do not ignore this. Review your account. Learn your bank's limits. Ask what fraud alerts are available. Put a trusted contact in place if that makes sense for you. Warn your family not to share cards or PINs. And if you know you will be taking out more cash than usual or using an ATM in a different place, tell the bank before the system has a chance to make the wrong decision for you. These changes are happening now. The pressure toward digital banking is happening now. The fraud filters are active now. And the people most likely to get caught in the middle are the people who still rely on cash the most. If this helped you, take 2 seconds and do 3 things. Like this video so more seniors can see it before a problem happens. Comment below and tell me whether your bank has ever delayed, limited, or questioned an ATM withdrawal. And subscribe because the rules around money, scams, banking access, and retirement protection are changing faster than most people realize. Most important of all, share this with a parent, a neighbor, a church friend, or anyone over 60 who still depends on ATM cash access. Because the worst time to learn about a restriction is after the screen flashes decline.